Have you ever made a trade into a false breakout? As if you're putting a line on the chart and you wait for the moment the chart breaks out, and when it does, the chart goes the opposite directions and you realize you're not trading into the breakout anymore. It was a fake out. In this video, I'm gonna be using technical analysis to help you prevent from trading into a false breakout. Here's the message. Don't do this to your account ever again. There is a way to trade this properly. Trust me, I know how it feels. I fell for this many times in the past, and I've developed a really nice way to identify and essentially dodge it. First, let me give you some real examples of what a false breakout looks like. Example number 1, I have crude oil on a daily chart. Look left and you can see when the chart forms the first top, the double top, at this oval box here onto the right hand side in the blue color, every single traders in the world may think, we broke the resistance to the left here at $82.73. But you know what happened to it after the fact? The chart went the opposite directions, went into support, broke the support onto the left. That was a perfect illustration of a false breakout. Let's go into the second example of a false breakout here. E-mini SP 500 index future, 15-minute charts. Take a look at this downtrend line here. And at the moment of market open, this actually happened today, by the way, where everybody in the world thinks this is going to be a breakout formations here. Market went out, break it to the upside by maybe 2 ticks or so, and then crush it onto the downside. Everybody who trade this chart onto the upside today literally gets stopped out onto the downside. And then of course, the perfect last illustrations of a false breakout in the chart named Ford. In this case, onto the right hand side, when you see a resistance here, look at what the market did here. It broke $14.36, which is the previous resistance on the charts on the left-hand side, by maybe 50 cents or so, maybe 30 cents or so onto the upside, and look at what happened after the fact. Market not only make that lower high, lower low, but pull all the way back into the buy zone to the left. This is a perfect illustration of the false breakout, you guys. Everybody thinks there's going to be a breakout onto the upside or the downside or whatever the directions is. And the institutions, they come in and they prove us all wrong. So how do we prevent this? Here is my step-by-step process on what you can do to never fall for this trap again. Number 1, don't take the first bite. You don't have to make a move the moment the chart breaks out. This first bite scenario is so natural for me compared to the technicals on the charts with the way that I've been raised up by my parents, for example. In my culture, at a family gathering, when people get together, the moment a dish is served onto the table, we as young adults don't get the first bite. Always the first piece of the pie goes to the elderly as a respect for them. I literally applied this on the charts daily. I don't personally take the first buy on the breakout. Number 2, wait for the charts to pull back or retest and enter on the pullback. This retest could be the previous floor or ceiling of price, aka support or resistance, where price would then revisit the second time, and this retest concept is where the trend is now confirmed. Think of it this way. Sometimes it's not about what you do. You gotta think about what they would do. And what I mean by they is the institutions. They will have to move the price, show a pretend breakout to make you enter, and then they'll come back, take you out for a loss, so they can make a gain for themselves to pull back or the retest. It's a perfect locations on the charts where the institutions would refill their order, and this presents the greatest opportunity to get onto the actions with them. Number 3, stay with the dominant trend, meaning if the breakout is in the opposite directions of the dominant trend, don't believe it. Essentially, if your daily chart is bullish and your 4-hour chart is bullish and your 1-hour chart is all heading into the upside, don't be the first one to trade the breakdown onto the downside. The force of a dominant trend will stop you out from this scenario very quickly. Let's take a look at some examples here where I will go into details on how to trade the breakout the right way. Example number 1, a perfect location where you can buy the breakout. Here I have crude oil on the 15-minute chart. This is the future market. Everybody in the world is making the pre-market analysis for today. Is going to go, I'm looking at the resistance here to the left. Market opens somewhere here. If I have $71.34, which is the resistance to the left, break it to the upside. I'm gonna make a trade onto the upside. You see the problem with that? I mean, if you enter here, look at how the market gets up and then it pulls back. If you enter here, this right there will get you out of the trade for a loss. Instead, here's the concept. Let this chart break it to the upside. Instead of making a trade right here the moment it breaks out the first time, I mean, we're talking about the first bite here. Don't be the first one who bites it first. You know, be respectful of the trend and say, well, give me a pullback and I'll re-enter, or I'll actually will enter the market as a buyer the moment the chart pulls back. And where is that? The perfect locations on the pullback is when you look left again and you see, oh, here it is. The previous resistance of the chart is now become the future support. So the analysis or the concept of buying and selling is the following. You buy low and you sell high to make a profit. In a chart like this, where if the chart breaks out, you don't want to buy at the tip. You want to buy at the dip in order to make money, right? So when you're buying at the dip, how can you identify this is the dip? By looking left. The concept here is the previous ceiling or resistance of price it's now become the future support. Perfect location to buy here, and look at these opportunity. If you make a buy position into here, once confirmed as a trend that it's going up, retest, pull back, support, buy here, sell there. Greatest way to make money. Let's go to example number 2 here. I've got gold, and smallest time frame it works too. Look at the 1-minute chart. Everybody in the world is going to make the assessment into the charts in terms of I've got a low high, low low, and all I'm waiting for the market open at 8:30 Central, 6:30 Pacific is the following. As long as this support to the left is broken to the downside, I'm going to make a trade onto the bearish directions, right? So let's say you determine you want to be a seller. Don't buy on the first breakdown, but instead wait for the breakdown to confirm fully to the downside and wait for the pull back. That is a golden opportunity to sell the market here and not there in order to maximize the sell positions, sell the tip, buy the dip. Second example of the perfect illustrations of how you can dodge this false breakout. And let me bring you the third example here. I've got Google, and this is a stock on a weekly chart. Look at this downtrend line. Once you confirm, here's my first high low, here's my second high low, and the breakout occurs. That 45 degrees trend line, look at how the movement breaks. The moment it breaks it to the upside right here. You see how if you traded the false breakout at the first moment it breaks out, this will get you out of a trade for a loss when it pulls back. And then the moment it breaks out the second time, pulls back, look at this trend line as a support. It support this here, it supported here, and the moment you gotta break out the second time, there it goes. Best opportunity to make a trade onto the upside. Once you have a break up or a breakdown, once you can confirm the trend, and when you can skip the first move and get into the second move, that is how you can prevent trading into a false breakout. By always waiting for the pullback. In summary, false breakout give us a window into the battle between amateur and professional traders. They'll give us a way to trade with the professional, learn to identify and trade these false breakout patterns, and trading will take on a different light for you. I hope you enjoy this false breakout pattern tutorial, and I'll see you on the next video.